Okay, pretty much everyone's got a goal to save money, but what if something happens? Do you have emergency funds? If you do, it could be costing you money. Here to tell us more is the president and CEO of Wilsey Asset Management, Brent Wilsey. Brent, good morning. Great to see you as always.
Good morning. Good to be here.
This is good because you know if you can stuff money in a sock, but it's not going to make any money for you.
No, it's not going to help out.
I like the way you started this. Your emergency fund is costing you money,
and it is. And I've seen people. You know, I've been managing money for 40 years. People, oh, you've got to have $100,000 just in case of emergencies. So we'll talk what you should have, but. Many times I see them in a bank account earning almost nothing. And the thing I tell people, it's costing you money. So have an emergency plan, not an emergency fund. And to tell you how much it's costing you, you have $25,000 and earning nothing. If you took that money and invested, earned just 8%. Over 10 years, that would grow to $53,000. 20 years, it would grow to $116,000. And then if you look at 30 years, $251,000, that's at 8%. And we generally earn around 10% on average on our portfolios. Well, that would then cost you $436,000 over 30 years.
Wow.
So it is costing people a lot of investment returns, growth on their portfolios by not investing that money because they're so concerned about the emergency that may come up. Just too much emergency funds. They got this thing like you've got to have, and I hate this one, you've got to have 6 months of your income for the next, like no, that's just a crazy number.
Yeah, because I mean, that's pretty basic because you want to earn interest on your money.
Yeah.
And you're not going to do that if it's in a bank account just sitting there.
No, you're not. And people don't realize we talk about don't have an emergency fund. Have an emergency plan. And what you first have to do is you have to figure out, okay, well, how much do I really need an emergency? And I tell people, or ask them, like, so what is the worst emergency you see come up? A lot of people say, gee, I really don't know. So it depends on your situation. Now, if you've got big houses, expensive cars, and expensive lifestyle, yeah, your emergency needs will probably be much higher than a person that lives more of a subdued lifestyle. Theirs won't be as high. So think about the worst case scenario it would be, and then say, this is what I would need in case an emergency came up.
Okay, so where do you put the money in the meantime?
But what you do is that you invest the money, and you can have a small amount, but what you want to do is have this plan that I talk about, have this kind of laid out, so when it happens, you don't panic. The first place you want to go to, and hopefully people take my advice, not to carry a balance on their credit cards, because if you've done that properly, then what can happen, the first place you have an emergency, you go to the credit card. Now, you can get a free loan for 30 to 45 days, so that would be, okay, could be a short-term need. But what if it goes a little bit longer than that? After you get to maybe 30 days, you say, gosh, I'm going to need this longer. Then look at, next thing you want to look at is to borrow from your IRA, because you can get a free loan for 60 days from your IRA. Now, you've got to pay it back. If you wait 61 days, boom, you pay taxes and penalties. So make sure you have that done. Then it's going to be longer than that. You have all this laid out. The next thing you want to look at is maybe set up what's called an S block, which is a securities-backed line of credit against your investments. Now, the account minimum for that has to be about $100,000, but here you can borrow against your investments. You won't sell anything, you won't pay taxes, but it's another place you can access to funds that if you need them a little bit longer than that now, maybe you're looking around 90 days. And then also, too, if you have a home, you get a HELOC, which is a home equity line of credit. That's another place you can go to. And you want these set up ahead of time. Don't wait till the emergency happens. Set up the S block now. Set up the HELOC now. So when you need them, they're there. Don't touch them just for vacation, but have them set up so when you need them, they're there for you. And then also, too, and I don't like this one because people kind of forget about it, is to borrow from their 401k. They seem to do that and never seem to pay it back because, oh, retirement is so far away. And both you and I know how fast the years tick on by before you know, like, oh my gosh, my retirement plan's not that good. And then other things they can do too. I mean, when we invest clients' money, we generally have a cash account and money market because we're waiting for good opportunities. Check that. Now, I will tell people when you take it from there, that means we can't take the advantage of the opportunities that could come up to get you better returns on your investments, but it's another place you can look at. And maybe you have a lot of stuff around your house. We just, I think a year ago, we talked about pawn shops. There's probably stuff in your house that you can sell or pawn that you could raise a few $1,000s doing that. So think about the plan of how to raise money if you need it, not put it away in a savings account at 0% and do nothing with it.
All right, good advice.
Well, thank you.
Wilsey. SmartInvesting2000.com, right?
That's the website, yes.
All right. Active service.